Hello, everyone, and thank you for joining us today. I'm Steve Burns with Crawford Software, and I want to thank you for joining us today as part of our ongoing Epicor educational series. I see a lot of returning attendees from past webinars, so thank you. I hope that you will continue to join us on our monthly webinar. Today, we'll be sharing some best practices for year-end close within Epicor 10. I'm joined by Senior Consultant Linda Ballard. Linda?
Hello, everyone.
Linda is a Senior Consultant here at Crawford Software and has over 17 years experience working with Epicor and Epicor customers, and actually an ex-Epicor employee. Well, we still have a few folks logging in. So what I'll do is I'll start today with a quick poll. And today's question was, have you experienced some challenges with your year-end close? So I'm going to go ahead and open the poll, and we'll let that run for about 30 seconds or so. Certainly appreciate you taking the time to provide your response. Great, thanks everyone. I'm going to go ahead and close that poll, and then let's look at the results. It looks like everybody has had some level of challenge, which is great. I'm glad you took the time to sit in on today's discussion and webinar. What I hope you find from today is to learn some tips and tricks and certainly some pitfalls to avoid when you're going through your year-end close to make it go more smoothly. So thanks, everybody. I'll go ahead and put that poll away. Just a little bit about Crawford Software. We've been an Epicor partner for almost 10 years and worked with companies of all sizes to help implement Epicor as well as upgrade customers to the latest versions of Epicor. We've spent a lot of time over the past couple of years upgrading customers, up to version 10, but our certifications go back to Vista and Vantage, and certainly we're having lots of discussions with customers right now about going to the new 10.2, which recently became generally available. So certainly very deep in experience with Epicor, and today Linda Ballard will take us through some year-end tips and tricks for year-end close. And what I will do is I will go ahead, Linda, and make you the presenter. Okay?
Thank you, Steve, and welcome everybody. Thanks for joining us this afternoon. I hope it's pleasant where you are. We actually have some sunshine today, which is nice. So what we're going to discuss are our 4 main business cycles that we find in Epicor ERP system and the recommended order of events, some of the prerequisites for each of the business cycles, a year-end accounting checklist, and we'll discuss some of the common pitfalls. Hopefully this will help you out with this year. And for the purposes of our discussion points today, we're going to make the assumption that your year-end, your fiscal year-end coincides with your calendar year-end. So we'll be talking about our period 12 as being ending 12/31/2017. We want to look at our manufacturing and inventory business process, and that's where we have the job costing and execution side of your business, as well as the inventory ins and outs. And that also includes your purchase order receipts on the manufacturing and inventory side, and your sales shipments to your customers. We'll take a look at your sales, your shipment invoices, as well as the other types of invoicing and credit memos, and then your cash receipts where you're actually collecting on those invoices, and purchasing, creating of your purchase order, whether you use your PO suggestions or some of you may use RFQs, requests for quotes, prior to the purchase order processing. And then of course we need to voucher and set up the AP invoices and then pay our suppliers through our payment processing. We also can take a quick look at payroll and or fixed assets if you use these Epicor modules, but unless some of you use that, I think we'll probably just only mention that that would be another portion that you would need to reconcile for the end of the year and make sure everything's in order in your payroll area and the fixed assets module. So some of the recommended order of events, and this is just a recommendation, you don't have to do it exactly in this order. Some things are going to work more smoothly for you if you take a look at processing your year-end closing in this manner. For your period, period 12 activity, you want to make sure that once you come to the end of December, you don't allow any more purchases or incoming receipts and shipments after the cutoff. So you might have a second and third shift. You want to take that into consideration as far as when am I actually going to cut off, rather than cutting off at midnight on the 31st, which some of you may do, but your accountant or your controller is the one that's going to do the final capture cost of sales and WIP activity, and so that is a discussion you want to have prior to the 31st. You want to make sure that your production activity has been completed, all operations are completed, you've issued all the materials, you've completed jobs, your controller has closed the jobs after looking for the costing, and if it's been done appropriately. You'll print all your necessary reports, you have your as-of reports, you have your real-time reports. So again, dates are very important. Say, for example, your stock status report, you want to date it the last day of the month, being the 31st, and your agings and things of that nature. That will enable you to do your reconciliations with the general ledger. So in manufacturing and inventory, you'll use your inventory WIP reconciliation report, which is like the Bible to the controller. You can run that report so many different ways, whether it be by date range or transaction type, for posted, unposted, or both. Transactions to the general ledger, which will move over to the general ledger once you run your capture cost of sales and post to the general ledger. It comes over in a periodic posting. Your sales cycle will include all your AR invoicing and your aging for your accounts receivable. You want to reconcile that with the general ledger, and your cash accounts for your accounts receivable collections from your customers. Payment and purchases, you'll want to make sure that you reconcile your accounts payable clearing account with your received not invoice report, and that's found under accounts payable reports. In side of Epicor, and you'll want to run your agings, etc. And then finally, you'll complete all the transactions in your general ledger, any manual transactions that you enter for general journal entries, accruals, recurring entries. Make sure that you've marked things as reversing if they need to reverse, and make sure that that all gets posted to the general ledger. So let's take a look at manufacturing inventory and what kinds of things we need to do to make sure that we're ready to close out at period end. Before we run the final capture cost of sales and WIP process and post to the general ledger, we do want to make sure that all receipts and shipments have been entered, that all your labor has been reported for the period, whether you use the MES system or if you use time and expense entry. You just want to make sure that all the labor is recorded, and take a look at your labor edit report and make sure there aren't any glaring errors. Perhaps somebody meant to enter 10 hours on a particular operation and it was listed as 100 hours, or the quantity was off. You know, human error is very possible, and you want to make sure you catch that before you run the final capture and post. Once that happens, it's hard to go back and make corrections. There are ways that you can do it, but it's a little bit more difficult to do it after the fact. You're going to want to look at your stock status report, and if you run the report to include any negative inventory quantities, you can address that. Hopefully you don't allow your inventory to go negative when you're issuing materials to a job, but you know, you want to check for things like that and make sure that all the material issues, backflushing, those types of things have been completed. If you ship directly to your customers from the job, make sure those shipments have been completed, or move the product to finished goods inventory from your job. And then you can have somebody in operations make sure that jobs have been completed, and your controller will go ahead and do the final job closing. So I mentioned the inventory WIP reconciliation report. This is the controller's Bible, you might say, and it should be reviewed for accuracy before you do the final capture. And once you're ready to do your capture, you enter the ending date for the period. It would be 12/31, and check the box post to general ledger. Keep in mind, you can go back and run it again if need be. So, and you can also check the box post cost of sales manufacturer variance at the same time. For our sales, I did mention that we want to make sure we've got all our pending shipments flagged as shipped. That's a trigger in the system which will record a transaction type of MFG to CUS, or if you're shipping from stock, you'll have a transaction type showing that you have actually shipped to the customer from your inventory. Your AR group should all be posted, and that would include any type of invoices, whether it be miscellaneous, credit memos that you might need to create, RMA credit memos if you're using the RMA process, returns that your customers have sent to you and they expect to receive credit because you are not going to rework it and send it back to them. And you want to make sure the cash receipts, whether it's wire or credit card payment by your customer, make sure those have all been included and posted. And then any necessary write-offs. You may have some outstanding balances on your customer aging. They may be small dollar amounts that you're never going to be able to collect on, and you may make the decision that you just want to write those off to bad debt expense or similar. So you're going to reconcile your age receivables with your AR trade account, and if you use advanced billing and deposit billing, then you want to make sure that you compare to that report and make sure it's a good representation of what you have left outstanding. Hopefully all that will be cleared and there won't be any thing that you need to balance and tie out on those advanced billing and deposit billing report. And finally, you want to look at your sales gross margin report. Keep in mind that you want to take a look at this after you run the capture cost of sales and WIP, because that's what's going to move the information that you've invoiced to your customers for the revenue. And keep in mind also that any miscellaneous invoice types will not be reflected on your sales gross margin report. In our purchasing side of the business, we've got our purchase orders that we've created and we've received upon those purchase orders, and they will appear once they're flagged as received on our received not invoice report. And how we voucher the invoice or create the invoice, they will show up on that report, and we want to reconcile that with our AP clearing account. We want to make sure as well that all our invoices that we have received from our suppliers have been entered, and it doesn't matter if you don't have a purchase order. You may have AP invoices for miscellaneous, a direct debit memo, or if you're using the quality system and you use the discrepant material process, you can create DMR debit memos from that area of the system, and they will automatically show up in your accounts payable invoicing process when you perform get DMR debit memos. So as well as all the other systems, you want to make sure that everything's been posted, that your payments have been entered and posted. And any manual checks, we don't have this happen in today's world much anymore, but sometimes if there's a crucial moment where you need to actually have the controller complete a manual check, the system isn't going to know about it unless you enter it into the system. You'll want to reconcile your aging, excuse me, and your advanced payment report with your advanced payment account. And finally, our general ledger, we have our prerequisite capture process has been run correctly, and as of the last day of the fiscal period, we want to make sure that everything has been reconciled, that our payroll tax liabilities are going to be ready for us to perform the quarterly tax report to the federal government and state if you withhold taxes for your employees in your particular state, and any general journal adjustments that need to be made, make sure those are completed, your allowance for bad debt depreciation, inventory reserves, things of that nature that your controller will know about. And then finally, we'll close the final fiscal period 12. Once we've done that, we want to run our trial balance and make sure that everything looks in order and it looks reasonable, and we're ready to move on and process our financial reports. That's typically your income statement as well as your balance sheet. And if you do that within Epicor, be aware that you can always export that if you need to into an Excel spreadsheet and make it more fancy or pretty it up, or do other types of reporting based on that. So we're going to want to close the final fiscal period for the year, and just a little heads up that you will get a warning if prior periods haven't been closed yet, or for some reason you've reopened them, so you could go back and make some adjusting entries. You will get a final warning message saying closing the last period will close any prior periods. Do you wish to continue? And this is just a reminder that, yes, in fact, you probably do want to go ahead and mark those as closed. And then the very, very last thing that you'll do when you're ready to move forward to, in this case, 2018, is you'll transfer your balances to the next year. And you do that by going into your general ledger, general operations, transfer balances. And in this case, on my screenshot here, I have transfer individual, the main book, the main fiscal calendar. I'm going to go from the current year to the next fiscal year, which is 2018. And then I'll just submit that. And what that will do is close out all your income and expense statements to your retained earnings, and your balance sheet, of course, will bring the balances forward to the new year. So I would like to take time to just address some of the common pitfalls. These may be things that you experience. You may have new ones that you could add to this list, but these are the ones that I typically have run into. One is where the capture cost of sales and post activity has been run, but say your controller or your accounting manager ran it at 5 o'clock on the 31st, and oh, by the way, we have a second shift, and they did some issue of materials or other transactions that now need to be captured as well. So what you want to do is just run your inventory WIP reconciliation report once again for unposted, and you can run this, like I said, as many times as you want, but I would run it for unposted, and then any types of transactions that weren't captured earlier in the day will show as unposted to GL. Another couple things that kind of go hand in hand, you may have inventory transactions that are going to non-inventory accounts. Thereby, your stock status report will not reconcile with your general ledger. And that might be one reason that you're off. You may have set up on a particular job, you might have set up the wrong part class, and it has a GL control account that's going to an expense account rather than an inventory account. And then the flip side of that is if you've done a purchase order and you have indicated that you're purchasing to other, which indicates purchasing to something other than your inventory, that should be going to an expense account. You may have made a purchase. It could even be for a service, office supplies, shop supplies or something that is going to go to something other than an inventory account, and somehow it got directed to your raw materials account or something like that. So you want to check on things like that. And one of the best practices is you want to check your cash transactions to make sure they're going to the proper bank account. You'll catch that when you do your bank reconciliations. The invoices want to be dated properly within the time frame, and receipts for materials and other such things, you don't want to backdate anything because that'll put it outside of the correct time period. As you well know, you want your revenue and expenses to coincide to the same time frame, and make sure that you've done all your accruals. So I want to thank you very much for joining us today. It's been my pleasure, and I will now turn things back over to Steve Burns. Thank you.
Linda, thanks so much, and it's always great to hear your input and your experience. We did have a few questions come in from the audience, so I thought maybe we'd wind down with a few questions. So the first one that came in was, once the fiscal year is closed, can it be reopened?
Yes, it can, and that won't, really, it's easy to do.
Now, is there any impacts, Linda, on prior periods if you reopen the 12th period?
If you reopen the 12th period, no, the only impact it's going to have is, say you reopen it because you've received some adjustment entries from your financial auditors for year end, and you want to make those entries, it is going to impact your financial statements. So
Sure.
Just keep that in mind.
Sure, that's a good point. And last question, you mentioned a lot of pitfalls to watch out for. Well, what would you say is the most common? One or two?
One or two. I would say the capture cost of sales process, where somebody's done some entries after you ran the process and posted to the general ledger, and those are missing. Another common one is to do backdating. Somebody says, oh, I got this last month and I need to put it back in period 11. We don't want to do that.
Okay. And there was one more question that came in. How would, you mentioned negative inventory quantities. How would one end up with a negative inventory quantity?
In the part class setup, there is a couple of checkboxes where you can either warn or stop or prevent your inventory from going negative. So when you go to issue materials to a job, if you have that warning flag on and you ignore it, then you potentially could have your inventory go negative. Hopefully most companies will pay attention to that warning sign, or they would just put the stop on it and not allow the negative.
Great explanation. Thanks, Linda. And thanks again, Linda, for taking the time today. It was great to listen to your experience and your insight on year-end close. And I want to thank everyone for joining us. I hope you enjoyed today's webinar with Linda. And I also wanted to let you folks know that there will be a recorded version of this webinar that'll be available for download from our website. And also, Linda has put together a year-end accounting checklist that will also be available for download. And what I'll do is I'll send out a link to all the attendees today. When those are up, should be just within a day or so, for you to be able to go ahead and download them. And I hope that you will join us for our next webinar coming up on Wednesday, January 17th, 2018. Believe it or not, we're almost at the new year. At noon Eastern, when we will give an overview of the new features and benefits of Epicor's Advanced Quality Management in Epicor ERP 10.1. You can register on our website at www.crawford-software.com or look for an upcoming email invitation. So I want to thank you again on behalf of Steve Carr, our president and founder, and all the employees here at Crawford Software. I want to say thank you for taking the time to sit in with Linda today, and hope to see you in January. Thanks, and have a great day.